Hi, everybody. This is Bitcoin Live. I am here with the Minotaur team. I represent the Power Law team. So we do the usual thing that we do every Thursday. We look at the Bitcoin price actions. We look at from different angles. We talk about the Power Law indicators. Then we go deeper in the liquidity, both the global liquidity and the local liquidity. And then finally, we talk about our trading system called Minotaur, and we show the recent moves that the system has done. Anyway, so let's start with the Power Law. Sorry for that, some technical problem. I have too many things open, like always. Okay, share. All right. All right. You guys see the chart?
Yes.
Yep.
Okay. So, all right, this is one of my favorite charts. It does all the important information. I turn off some information like the 4 years moving average, but we can look at it in a moment. So, like always, I kind of introduce a little bit for the people that maybe are not familiar yet with the Power Law. So the Power Law is trying to show the general trend of Bitcoin using this mathematical approach where if you plot the log of a price and the log of time, it's unusual to plot the log of time, but this is what is unique about Bitcoin. It looks like a straight line. Unfortunately, TradingView doesn't allow you to do this. There is a trick that you can do, but we are not going to that trick today. But in general, if you plot, if you do this with using any other plotting software, you're going to see a straight line. That straight line means we have a power law, so you can actually write an equation, and that equation usually is y equal x. In this case x is time to some kind of a power. The power in this case is a number that is close to 6, 5.82, something like that. Now, that equation, that simple equation, it's really amazing because through a simple equation, you can express the majority of the action of Bitcoin over the long term. It's really the only scientific validated model that we have. It's not, people confuse this and they think, oh, it's just another model. No, it's not just another model. It's the only scientifically valid model we have of Bitcoin that is also not just supported by the evidence, but also has some theoretical backing, because this is what you expect. This kind of power law behavior is what you expect from a system that, the underlying mechanism for the system is network behavior. And we have already demonstrated this many times. If you read my articles, you will understand why Bitcoin is a network, right? The mathematics of network explain the behavior. So the equation that I just described is the white line. That is very interesting because it kind of represents a fair value for Bitcoin. We also can determine a line that is about, it's 40% of the value at any particular point of a middle one. And this is the gray line. We call it a support, Bitcoin's power law support. As you can see, it kind of agrees with all the major bottoms that we had historically. That is pretty amazing and kind of almost scary to look at. Even during COVID, this is a COVID event, we reach that bottom and we bounce back. We have another important line that is this orange line. The orange line represents the decay. So it's both. It contains both the power law trend, but also the observed decay. So if you subtract the price from the power law, you're observing what is left over, right? And these are the deviation from the power law. These deviations over time, they decay. Even that is actually mathematically predictable, where you could have used the first three bubbles and predicted the fourth one within few $1,000s. So when everybody was screaming last cycle that Bitcoin was going to 100K, this model will have told us that no, we were not going to 100K, we are going around 65, 70 at most. This is what this model says. Now, the idea is that if it was so precise to be able to predict, using the first three peaks, the fourth one, can we extrapolate it to the future and make a prediction of a next peak, right? Well, yes, we can do that, but this assumes that everything that happened in the past, all the different patterns that we observe in the past, are going to also apply to this particular cycle. And this cycle looks different. First of all, usually when we cross the power law, we never go back. We did it very, very briefly here, but for a small amount of time. In fact, it bounced back even stronger than before. But we never had an extended period of time where, see, here is where we expected the bull run to start after 2 years of spending. Bitcoin spent 2 years in this region that we call the core power law. And we go to the turbulent power law. This is the terminology that we use. We started well in November. I even predicted ahead of time that we're going to leave a power law. And then for some reason, we had a correction. Now, this correction is linked. It's actually, you could have predicted if you took seriously the relationship between global liquidity and local and Bitcoin, because there was a correction that was 3 months ahead that showed that we were going to have the correction was in global liquidity. If you took seriously that delay that is about 85 days, you could have predicted that we were going to have a correction in the price. Unfortunately, I didn't take seriously that correlation until recently. I think it's a valid one. I demonstrated through many tests that it's a real one. But it is surprising because this never happened before in the previous cycles. Now, then we recover from this bottom, and it seemed that we were going back to the path that is kind of described here. This blue curve is supposed to represent the cyclic nature of a cycles, and also indicate kind of that we have a top and a bottom. It's a bookmark more than a precise trajectory for the price. But just to give you an idea, we should be much higher. We should be kind of here, like in the 140 range right now, if we were following the normal cycle as before, because the predicted top is about 200K. So we are much lower than what to expect, what we should have expected if we follow a normal cycle. Well, it seems that we recover, but then again we started to follow too much the power law. That is the problem. The power law model is not broken at all. It's becoming stronger and stronger as time passes by. The main question is, are we going to leave a power law and go to these higher peaks and then have a strong correction? Right now, it looks like the Bitcoin has a problem leaving the power law. It loves the power law too much, and it stays. It deviates a little bit, but it doesn't like to go too far away from it. So it's something that we are monitoring very very closely, because it's something that needs to be understood, right? Is this what is going to happen for the future, that we are simply oscillating around the power law? The power law, it's the backbone of this model, right? And it's becoming stronger, not weaker. The question is, are we seeing these challenges to the power law that are basically the bubbles, right? Are we going to see them again? We don't know. We need more data to understand this. Now, the global liquidity, I have charts that show the global liquidity uh, is actually supporting the idea that we are going to continue to go up. I will have to switch. I can show you. I will let Marcus first describe a local liquidity, and we can go back to the global liquidity later. But it's basically going up, right? So there is this um, delay between the global liquidity and the local liquidity. There is it's 85 days where liquidity continues to go up. There is no sign that there is a major correction there. So that means that probably it's not one-to-one, right? The relationship is not as strong as the power law, for example. But it means that at least we have one of the necessary conditions for the price to continue to go up. That there is a lot of liquidity. So we're going to see that if this is the case for the next several months, at least 2-3 months ahead of us. Anyway, this is what I have to report about what is going on with the power law long-term trajectory. Basically, we are continuing to follow it maybe too closely. Okay. Guys, do you have any comment on this, or do you want to add anything else?
I think it's still, if we get there in the next sort of 3 to 6 weeks, that 140, 160, in retrospect, it's all going to look like it all happened according to plan. So I'm still pretty confident in, but I'm confident because of the liquidity that we're seeing, which Marcus is going to show us in a second. I think that 140 to 160 is going to happen very, very soon.
Mm-hmm. Okay, Marcus, do you want to go ahead and show us your chart?
Okay.
Marcus, are you ready?
Can you hear me?
Yeah.
Okay.
Yeah.
All right,
Yeah.
I'm back. You uncensored me. Okay. No sunflowers. All right, here we go. What we're looking at here is the latest developments on the price action first. I always like to start by iterating that liquidity and price are one and the same. You have price action that creates liquidity, and liquidity attracts price, which creates the action. So they're one and the same. So currently what we are looking at here is we have been, for the last 10 days, we have been consolidating right here. We're in a consolidation pattern. Some people might call that a bullish flag. But what it really is, after a big, we had liquidity here like this, after a big liquidation event, then the market makers, or the people that have the power to influence the market, they have to balance their positions. And that's what they're doing there, balancing their positions, and at the same time creating new localized liquidity. Game continues. So let's take a look at the Bitcoin Bybit futures. We use that. We use the derivatives because that is where the leverage is at, and that's where price is discovered first. So voila, let's add in liquidity. We do have some very good events here. And the first thing I always like to tell everyone is, during these times of boring consolidation, you typically get bored, but that is the time to make your positions, because what are the market makers or the institutions doing? They are rebalancing and they are loading up positions. That's what they're doing. They're offsetting. You had a huge move here. You have to reshuffle that. You have to offset some of that before you move higher. So this is the time to build your positions, just like they do. They build their positions, then they move the price. Build the positions, move the price. So now is the time for you to build positions. A lot of times what retailers do is they like to get bored here. They don't do anything. And then when the market starts moving, then they want to participate. That is not the time to participate. The time to participate is when the market is consolidating, build your positions, and then cash out on the moves. So, okay, really quick, let's look at a couple of things here. This was level one. We were in a we had this massive liquidity pool here, short pool, and the composition is 3x, 5x, 10x, 25x, and 50 and 100. So right here, this is what we call level. This is level 1. This is level 2. This is level 3. So what does that mean? What that means is we classify the levels based on where they are created. So right here, level 1, 10x, 25x. Level 2, 5x, and a little bit of 25. Level 3 is 3x. Level 1, 2, 3. So you can see right here where they were created initially, and then they get blended into one massive pool. So when we come over here to the end of the pool, we can see that we have already cleared level 1, which is 10x, 25x. We have level 2 waiting, which will be the 5x. That'll conclude the 5s. And then the level 3 is up here, which is 3x. So we're getting ready. This consolidation is getting ready to take level 2. So pack your bags, get ready to move. We're going on a little trip. One thing that has happened here that's very interesting is liquidity is an ever-growing process. You know, a lot of retailers, they like to bet, right? When its price is chopping, it's creating new liquidity. And you got people betting long, people betting short, and they're just creating these pools. So I'm going to show you that in a minute. But what I want to show you right here, while we have all the liquidity in one picture, is we are getting some new developments, right? So last week we were at about the 140 range, but we've already grown to about 143, 144. So we're growing. So that's going to be a magnet for price. And here's the most interesting one of all that kind of gets us back into the power law. We have a tiny little island of liquidity being formed up here of 3x. And this is interesting because this liquidity is at 153. And why is that important? Because that's called we call that mid-range. Mid-range is right here. This is that type of liquidity right here that gets in the middle of the range before we get established. So that's our mid-range. We're already starting to get it now. So the price will liquidate everything, run higher, take out that mid-range, and then settle into a new zone, a new range. So that's very promising that we're seeing that participation already. And believe it or not, this consolidation right here is bringing that in. That's building that up there. So we already have a tiny little composition of 3x already building for the mid-range. So when we take this out eventually, we'll take out the mid-range pool, and then we'll get to the top for the inclusion of the range. So that's promising, and we're on schedule. That's very, very promising. One other thing I want to show you how the liquidity is being built now, currently, as you can see right here, as I begin to back out to the more current liquidity, we can see just what I was telling you, that the market makers, they check the price, and you start creating liquidity on both sides, and that's what they're doing. And then when we take this longs out, this pool will remain. This one's already here, so you got 3 levels already. The market loves to move in these 3s, so we're going to kill this one, mitigate that one, and then we'll come back and take these down later, much later, after the run is over.
You think that first one is going to hold and it's not going to get taken out
This
now?
one?
What's that at 112? Yeah.
Yeah, this is like 112 at the bottom. You know, when they typically, they need, you know, you have pool 1, pool 2, pool 3. It is more probable than not that this pool will remain untouched like this one was. So we'll have some type of untouched event, because you'll get that third level, because the way the markets are very efficient. So they need return liquidity. It's kind of like you need your return flight, right? You go on a trip.
Sure.
You need a return flight to come home. So it's going to need this liquidity to come back down. So it typically won't take it. If they do take it, then it'll do that, you know, more than likely.
So what I'm seeing evidence here of is building for a return to below 100K, which is the power law support.
You could come back here, yeah, somewhere in here.
Right.
Yeah.
So we're seeing the magnets that are being created that will draw the price back down to power law support. That's interesting, is it, Giovanni? Like, to think that it might take a year to get to the top of the bull to come back down, but the infrastructure for that pullback is we're seeing it being created right now. What do you have to say on that, Giovanni?
Yeah,
there's your levels.
I mean, we need much more aggressive behavior, right, to go all the way to 200K.
Yeah,
Well,
and
we've got this huge. We've got
here's a
this
good.
pull here.
This is a very healthy sign, though. This is another clue that's going to get us here. So now we already have this mid range liquidity coming in here at 150, 53. That's getting us a lot closer to 200 right there than we were. We were last week. We only had confirmations at about 140. So now we're already getting confirmation at 153. That's a really bullish. That's a real bullish sign. So, you know, you add another 10% on top of that, you know, and now you're getting there.
Mm-hmm. What is the leverage you are looking at right now?
That's 3x right there coming in.
3x.
And
okay.
this action right here is creating that up there. 3x is a long ways away. Yeah. The market it's a bunch of computer programs, and they know what action needs to be made to create the liquidity that they're going to need later. It's just amazing how the system works. But fundamentally, from a big picture perspective, it's pretty simple what's actually happening. It's not complicated. The concept, the execution is incredibly complex, but just high level is very basic.
And you know, I remember there is this overall theory of a log periodic power law from Sornet that says that basically, as we come closer to some kind of critical event, if we do have a bubble, these oscillations are going to be faster and faster. So it's not going to take like, you know, see, for example, we spend.
Have you got that? Have you got those oscillations for the Bitcoin chart yet? Have you?
Yeah, I need to calculate them. Steven has done some work, like every. We didn't have an episode last time, but every week we show the update, and it's a pretty cool chart. I need to bring it up next time, but we have because we can compare it with this. It will be really cool. But basically, it looks like this. It looks like you're going to see these flat periods, and then these are time when we go up, and then some oscillations, and then up, and so it looks exactly like this, and it's projecting it to the future, you know.
And we noticed to add to what you're saying, we noticed another type of price action. The net result is still the same. We're going to displace this, but the price action has changed since the ETFs have come in. Institutions are moving more methodically. If you look at the last time when we displaced, right, we checked up a little bit, but then we displaced hard and fast. Now, since the ETFs have come on the scene, we've been doing this kind of like we'll displace a little bit, we'll consolidate, displace, consolidate, displace, consolidate, displace, consolidate, displace, consolidate, displace. I actually love this action. I like this better because this type of action here gives you time to build your positions like they build their positions.
It's much healthier, isn't it?
It's
a
much
healthier structure.
Yeah. I want to make sure the audience understands the power of this. So many retail traders, they get bored here and it's not doing anything. And they only want to move during the displacement. That's when you make your money. So right here, get your positions ready. You already have your targets. Level 2, level 3. Those targets are like highly probable. Build your position, buy your cars, pay off your houses, do whatever you got to do with that move. It's just right there waiting on you. Yeah. Build your positions like they do.
I was saying this in the community call we had yesterday, that those consolidation periods is where everyone loses, because basically those consolidation periods is Bitcoin creating an opportunity for you to make money. But what people do is they try to create the opportunity inside that, and they fail, right? Because they're trying to go long and short when price is moving sideways, when that's actually the most exciting thing. It's building towards a move. So it's very powerful.
We have a question. We can answer this question now.
Sure.
Can we look at the volumes? Sometimes you project the volume on these charts, because there is this analyst, his name is Checkmatey.
If you see up here, there's going to be, as I hover over, you can see the magnitude of it. That's 28,000. You know, that's getting that's a
gigantic.
Really big number. Yeah, it's gigantic. It's a big number.
Well, how it compares with the one we had before, the other red.
They're very similar in amounts. Yeah, it's the same type of volume. Yeah, it's similar.
Yeah,
It's very
Actually,
similar.
it's a
The
little bit
setup is
bigger.
very similar.
Yeah, it's very similar. A little bit bigger now than it was
It's
here.
bigger now.
But to add to what you were saying, also, Sebastian, when we have this type of price action, where are you going to get a position? Where are you going to get on at? You know, it's moving so fast, you can't. You just have to chase it, and that's not a good strategy. Chasing the price, so
It's
it's hard to get
actually
on. This
it's
action here,
probably the reason it pulled
so
back so aggressively as well, because the
yeah,
move was so fast.
yes.
Yeah.
But this type of price action here is just so forgiving, so easy to just trade this to invest in that. That's easy to do. So I
Mhm.
think that's my hypothesis is that it's the ETFs, because they're institutions. They're probably contributing to that type of price action because it suits their type of business model. This one over here, this one was more retail, impulsive, FOMO, all that. Not saying we don't have that same type of volume, but the institutions just smooth it out. They're so big, it's kind of like an elephant in the pool. It just kind of balances all of the action. Yeah, they weigh it down, keep it nice and
Yeah.
uniform, which is great. I love it. I hope it keeps doing that. Yep.
Yeah, and people make these claims, right? Sometimes, and there are a couple. Checkmate is a pretty good analyst, but I want always to double check stuff because I sometimes listen to these analysts and they make claims, and then you go and double check what they are saying because people
Yeah.
take it for granted, right? And then it's not correct. This is why we always stick to data. And we do
Yeah.
this on a regular basis, so we have up-to-date information, so you
And
confirm there is a lot of volume in this move,
yeah.
right?
Oh, there's the composition is very dense there, 180 something thousand
Yeah.
to 100, and then looking at the lighter areas, as you can say, it's a lot much less. Yep.
Yeah, it would be like very, and it's not impossible, but it would not be characteristic to start taking some of the pool and then reverse. They're going to take all of it.
They're gonna
That's
take it.
typically how it plays. If they get a
Yeah.
little bit of it, they're coming for all of it.
Yeah, they're
And
gonna get
there
it.
is such a pool above there that I think people get confused because they see the market moving sideways like it is now,
Right.
and they go, "Oh, there's not enough volume for it to go
Yes.
up."
Yes. Yes.
There
Yes.
is.
Yeah. This is what
Actually, when the market, yeah,
go
when
ahead.
the market's doing this,
That's the
it's
time.
preparing
It's
for its
preparing.
next move. If you actually look back on everything Marcus just showed you, the pattern is playing out over and over again. This is not happening at random. Now,
Yeah.
when a move happens, it can't just continue. So the reason it starts moving sideways, as Marcus said, is bets start getting placed on either side
Yeah.
of the book, which creates
Yeah.
liquidity, and then that's the fuel that it gets taken with. It's a repeatable pattern that's visible.
Yeah.
So
This
repeatable.
25x, you can see this bottom pull there that you just circled. What it's doing is it kind of anchors the price and stops it from popping again. And that's what the market makers are going to hunt, right? They're
Right.
hunting those 25, 50, 100x positions. Because if we just kept going all the way up, pretty much everyone that did a 25x, 100x long, they're all in massive profit, right? It would just be the easiest thing to do to create a 100x leverage position and just ride it up if it's that
Right.
predictable.
The
But what
100x,
happens is
the 100x
it's
got
a
liquidated in there.
correct.
They're
And now
close.
what's going on here? The 25x is going to get liquidated. They're not
They're
going to
gonna
let
go.
that 25x.
And then
It's
look how
too close.
the harvesting process works. It checks up, and that starts the brand new baby pool right here. It starts, and then over
Yeah.
time, the composition gets thicker and thicker until it gets
Yeah.
the right volume that they need to they get their book.
Correct, and it's a trap, right? Because everyone's seen that big pump, and then they're entering those long positions, and it's
they're-
waiting in that range to see where it's going to attack.
Yeah.
People are entering these positions
Yeah.
building up tension, and then it's got a whipsaw.
Yeah, there are people right in this middle here. There's a high volume node right in there, and there's half the people you can look at this almost balanced. Half the people believe it's going to go down, and half the people believe it's going to go up. And all they're doing is their stop losses, liquidation levels, everything is in this pool right here.
Yeah.
And when it gets to a certain point, like you can see right here, once it gets dense enough to give them the right volume, because those are trap buyers. They're already going to buy. And we already know what price they're going to buy at. So when the market makers get enough inventory, they're going to sell it right into those buyers. These guys are buying high, selling low, buying high, which is the opposite of what you should do, right?
Mhm. Mhm. And it's
Supposed to buy
extremely
low, sell
powerful
high.
because
Yeah.
you're looking at live data of the order book. You're not looking at a resistance level and a candlestick breaking above and going, oh, we're breaking out because we've broken some, horizontal line on a chart. This is actual data from the order book. So it's
Real
incredibly valuable.
incredibly powerful. Yep.
Yeah,
Buy.
and this is what happens many times, right? People look like Sebastian was saying. So maybe these were checkmated because, like I say, I respect him, but maybe he's looking at the current transaction volume. You need to look at the entire book, and you need to see
Yeah.
what
Oh yeah.
all the orders that are sitting there.
Yeah.
That is also volume. Because
Yes.
it's
Absolutely.
this is why we have these sudden moves because they are there doing nothing, and then all of a sudden they just move in one of the directions, right, going up, and all,
When you
all of
have
a
when you have a
sudden,
sudden move, you're just getting it's just a
yeah,
liquidation event. That's all it is. Just
exactly.
liquidation.
Yeah, and you can back test it. Go back and look at any big move that's happened. It's happened after consolidation period, pretty much on the money. So it's something that it does repeat.
Yeah.
Yeah.
I mean, these are displacement candles. That's why you have that big candle to displace all that liquidity that's been being harvested. Displacement candles.
Yeah,
Take
this
your
is a
liquidity.
liquidity chart.
Yeah.
Became entertainment. It's the colors represents the volume,
The
right?
density. The density.
Density,
There's a
yeah.
filter here that we're using.
And
Yeah.
then Marcos can select different leverages, right? Usually, the
That's
biggest
10,
leverages are
10 and
yeah,
25, 5,
yeah,
3, everything. Everything that
yeah.
we can track here is here.
So three, when the leverage is small, if I understand, correct me if I say something wrong, you're going to see much dispersion, right? See how we can go all the way to 150. Nobody's going to put
Yeah.
at 100 pair there because we are going to get liquidated immediately, right?
Yeah, the 100
usually
the hundreds are
much
right
closer
here.
to the price.
100,
much closer to the price.
50,
Yeah,
25, 10,
yeah,
5,
and
3, like that.
Yeah. So that is very interesting because it gives you like almost like a
map.
3D,
Yeah,
maybe
3D,
not even 3D, 4D
4D. Yeah.
vision,
Yeah.
4D vision of of what is going on. It's
Hey,
much deeper understanding.
Yeah, I'm gonna
And
stop
this is
here.
why and
go
I
ahead.
know, like for example, this comment, right? Oh, head and shoulders. I studied these patterns. I don't believe in them. I don't think they are real. Maybe the
No.
only reality of it is that people. It's kind of a
I have
self-fulfilling
I have
prophecy.
I have a way I look at patterns. Patterns are like dinosaur fossils. It's proof that something was there.
Yeah.
It's not like a something made up. So when you're looking at patterns, it's just proof that something is measuring something that is happening. The pattern is not causing anything. The pattern is just proof that it exists in the first place. That's
Right.
all it is. You can call it a pattern, whatever. It's just proving the action that's taking place. There's a reason for the action. And the pattern is just a proof that it happened. Moving averages just measure the strength of markets. Oscillators measure strength, momentum. But there's a reason that those are indicators always indicate what has happened.
Yeah.
And it's evidence of what happened.
Yeah.
That's all it is. It's not, it doesn't create anything. It's just the evidence of what happened already.
Yeah.
Yeah.
And this is why we focus on things that are more scientific, right? Like the power law,
math,
liquidity,
and business
so
models.
Yeah.
Of course.
About the holiday, I kind of agree. I think once we are coming closer to winter, when it's autumn, winter, there'll be some big movement in either direction, probably up. But I think during this time, it's actually surprising because there are often in summer there is a retracement of the price, and we are pretty stable instead. So it's actually a good sign. But I agree. So something will happen.
All right. So I guess we'll get Sebastian going here.
All right. This is very good. Let's.
Thanks, Marcus.
Yes, sir.
Yeah.
All right, I'll share my screen. Just let me know once you can see it.
Okay. So we are discussing now this algorithm because a lot of this activity that you see, guys, in fact, Marcos always comments on this, right? It's mostly bot. And so we are actually developing a bot that is not going against the market, is actually trying to follow what all these other bots are doing and actually going with the flow basically, and capturing some of that volatility, right? And so it's a tool that I really believe strongly, and I recommend to people. I did, in fact, maybe later I'll show you this graph where we can calculate what Bitcoin is going to do in the future. There be diminished. It's still going to be amazing, right? In the next 15 years, we are talking about 12 years, are talking about 15 pair, right, for Bitcoin. But if you have a tool like this, you can literally multiply your Bitcoin by 5 times or 6 times in the same period. So this is why I insist so much. It's becoming kind of like a battle cry for me, to tell people that they need to be more active with their Bitcoin. They need to be a little bit more involved and aware of what is going on, and use some of these tools. You can do options and other things. But anyway, I will let Sebastian to talk about the algorithm. Go ahead.
Thanks, Giovanni. Is my screen loaded?
Yes.
Fantastic.
See it.
All right, so hello everyone, and I'm going to be showing you our algorithm today. For anyone that's new to the show, this is an algorithm specifically designed to trade Bitcoin, specifically built with the power law in mind, especially around how we manage risk. We always use the power law support as the emphasis point of all the risk management that we use. Now, the tool is very robust, so it can be used in a number of ways. What I mean by this, there's multiple ways to trade Bitcoin using this. The first thing you can do, if you're someone who is a futures trader or day trader looking to trade Bitcoin perpetual futures contracts, you can simply use this tool to trade Bitcoin against USDT and make USDT profits. You can also use this tool as a way to collateralize your Bitcoin and then allow you to also trade using your Bitcoin as collateral to receive USDT profits or Bitcoin profits also. So that's a very interesting feature that it has. The reason that's interesting and powerful is a lot of people are sitting, hodling their Bitcoin, not using it in any meaningful way, which will still, as we all know, get you a good result. I say this every week when I'm on this show. We're all Bitcoin hodlers, right? We all buy Bitcoin and we hold it. But there's something very powerful about being able to leverage that Bitcoin and then gain additional yield on it. And this is why when you are spot holding Bitcoin, essentially, for you to be gaining profit, you are relying on Bitcoin to constantly break new all-time highs. So when it makes these all-time highs, amazing, you're in profit, you're making money. But as we know, Bitcoin doesn't continuously go up forever. There's long periods of downwards price action and periods where the market is moving sideways, where your Bitcoin is basically sitting there idle. Now, what the algorithm does is it will trade Bitcoin's price action, and it will allow you to gain yield on top of your Bitcoin. And it does this in a very safe and intelligent way. Now, the algorithm is essentially a Swiss Army knife that can be configured in any way, shape, or form. What I mean by this is if you're someone who's very conservative, we have the ability to protect capital and trade Bitcoin all the way down to the power law support and even further. What I mean by this is the algorithm can handle 65 to 75% drops in price, keep your capital safe, and still have you profiting the whole time. If you're someone who's a little bit more aggressive, you can configure it so that your levels are higher. And this is one of the most important things about the algorithm is that you're not being put in a box and told, this is how you run it. It's a tool that can allow you to really run it how you want to and with your own kind of risk profiles in mind, which is very, very unique. Now, how the algorithm actually trades, we use a number of different things inside the algorithm for entry and exit logic. The forefront of the logic is all based on trend following moving up and dollar cost averaging moving down. It goes much more complex than that in terms of how it actually generates a signal. But if we come back here, I can give you an idea of how it trades price action. Now, all the lines on my screen, this is basically a free open interest indicator on TradingView, which tracks liquidity, similar to what Marcus was showing, but it does not have the level of depth that the trading different one has, and we're also on a 15-minute time frame. So this is going to kind of show us where liquidity is building on a 15-minute time frame, and as you can see, we've got liquidity on either side. But it's good to watch how the algorithm actually performs in this liquidity. So if we start from here on the left-hand side, Bitcoin topped out at 123K, and then we had a pretty decent sized sell-off, roughly, let's say 6%. Now, the first thing you'll notice is that our algorithm is not trading this selling pressure. Now, the reason the algorithm is not trading this selling pressure is it's not just a dollar cost averaging martingale bot that you go and get on one of the exchanges, right? It has internal logic built into it so that it understands if the market is showing heavy selling pressure, it's actually advantageous to wait to make entries. Similarly to if the market is showing heavy buying pressure, the algorithm has the intelligence to actually get in and out of the market faster, right? So it's unique. And it's very, very good at making entries and exits. That's probably the biggest alpha this algorithm has. And any of our customers that use this will attest to that. Now, as you can see, the market has a big sell-off. We make our first buy here. The market continues to fall. Now, that's not a problem for us because we have been very efficient with how we disperse capital. We are not putting our whole account on the order book and hoping that Bitcoin increases in price. Because what happens when you do that, if price goes up, sure, you'll make some money, but if price moves against you, you're going to get liquidated very, very quickly. So when price moves against us, that's actually something we're excited about because the algorithm is so good at picking up entries. It's going to lower our average price and it's going to give us the ability to exit Bitcoin eventually on a sub rally, which is what we do. As you can see here, we make one more entry. And if you look at where this long was placed, it's at the very bottom of the price action. This is not, a fluke. This is by design. It's very, very good at picking up bottoms. As we can see, price action increases and we close. Now, an example of the algorithm trading up, we take a long position here, price moves against us, we wait, price comes back up, we close, right? So the algorithm has the ability to trade up, trade down, and trade sideways, but it's not perfect. Everything has push and pull, right? Everything has give and take. And what we mean by this, those periods of consolidation that Marcus was just showing on the liquidity heat map, there's going to be times as well where the algorithm is sitting and holding positions. But this is actually something that's very, very powerful because what people need to realize is when Bitcoin is moving sideways, not doing anything, this is where people lose most of the money because they are trying to create opportunities while this is happening. And the problem is there's no actual direction. And this is actually how the book is filled. The book is filled with people placing orders on either side of the market trying to make money. But the reality is they're playing a game they can't win. Now, the algorithm during this time sometimes can be slow because what it's doing is it's holding onto positions. But there's a very important thing here you need to understand. It has no emotion. It doesn't need to sleep. It's not sitting there watching the market getting scared. It's executing based off a set of rules and it's doing it over and over and over again. And unfortunately, this is something we can't do. And this isn't a knock on humans or the human race, but we can't be in front of a computer screen with no emotion executing consistently 24/7. This is another key reason as to why this works. It does not have the emotion playing in. And when we close positions, we wait, we enter when the time is right, and we close them when the time is right. And it's actually very simple, but it executes very, very well. And that's the key. So as you can see, we've had sideways price action here. Most people are sitting, hodling their Bitcoin, going, I'm bored, this is boring. But for us, this isn't boring because we're actually trading this whole time using our Bitcoin as collateral. Or if you're using USDT as well, right, this is giving you the ability to get optimum entries and exits and have consistency in the market, which is very rare. Now, the last thing I want to show before I pass off to Costa, just want to show everyone what it looks like when the market is having a decent downturn so you can see how the algorithm actually works. So as we can see here, we took a long position, we exited, and then the market starts moving down. Now, as we can see, we do start to pick up positions, right? We make our first position here, we make our second position here, we make our third position here. This is a very important thing to understand because we can actually buy high, right? We can actually buy high and have the market move against us and still turn a profit. This is a very, very unique thing to do, right? Because we made our first buy at 107K, right? Market moved against us. We picked up more orders, but then we actually sold at 107K, right? So this allowed the algorithm to DCA down, pick up positions, and then exit on a sub rally. So the biggest strength. Yeah, you go, Marcus.
Just to add to that, it's a trend following algorithm. So it has to do that first order by its programming to try to find a new trend. That's why it takes that high order, because it's looking for a new trend. No one on earth can know whether it's going to be a new trend or not. And when it doesn't turn into a new trend, it uses the DCA to
Exactly.
secondary.
Which, you know, it actually allows this first order to be completely wrong, which is going to happen sometimes, right? There's no system out there that gets the perfect order every time. If there was, right, you wouldn't have to ever do anything again. You'd turn it on and that's it. But even when the first order is wrong, that doesn't really matter, because if the market moves against us, we'll make more money that way than we will with the market going up. And to me, that's the biggest value in this system. It's not, it is its consistency, but it's its ability to make money and protect your capital when the market is falling. That's the biggest edge, right? That's what we actually want.
Even the best trend following systems on the planet, trend following systems are about 60% win rate, 40%. So it's doing there's no high win rate trend following system anywhere. So it's doing a great job of that.
Exactly. And it gives you the ability to go up, down, and sideways, and you can sleep at night, right? Which is probably the most important thing. So, you know, for anyone that's interested in this, you know, of course, you can book a call with our team. We can go further and we can go into much more details also. But I'll pass off on to Costa now, and he can go next. But yeah, this is essentially what we do in a nutshell. It's important to understand as well, on a final note, you know, you do not need to be an experienced crypto trader to use this tool, right? We will give you the consultation, we'll help you, and we'll teach you to set these tools up as well, and teach you everything you need to run this system successfully.
Thanks, Seb.
No worries.
Let me see if you can see my... Let me know if you can see my screen. Yeah, we're seeing it? Okay, fantastic. Great. So I've basically got two charts that I'm running at the moment. These are the ones that I set up with this live stream when we started doing it around December from last year. So let's just take a look at the performance of this. So we have a look here, overview, and it's around a 35% gain. And you can see a bit of the data here. What's particularly good is when you see a line that goes relatively up from left to right with relatively small drawdowns. This is what you want to see. So a 35% return from December to July. So one of the things I wanted to discuss is there are two ways to do this. You can do what a lot of people are doing, what Sebastian said before. I know what Giovanni is doing all the time is using your Bitcoin as collateral, running the algos on it in a very safe and strategic way to then basically realize some trading gains in USDT and buy more Bitcoin. Another thing that I like to do is I actually like to put a certain amount of money aside and use it to actually realize profits weekly or monthly. And then I can actually use those profits to cover some bills or pay the school fees or whatever I need. So I reverse engineer it. I go, if I need $1,000 worth of groceries every single month, well, why not set up a bot that will deliver that $1,000? And all I have to do then is reverse engineer a pretty predictable rate of return, and then set aside that $20,000 or $30,000 on a bot that I will need to be able to extract that $1,000 a month. And I simply just use USDT, trade Bitcoin with it, and then extract the profits every month. So, you can create a way to generate yourself cash flow to use in the real world. Or you can go let's call it the double, what would you call it, Giovanni? Double maxi or triple maxi, when you're using the Bitcoin as collateral to just buy more Bitcoin. That's the double maxi. The triple maxi is when you use an inverse contract to then realize the gains in BTC, which Sebastian can show you how to do. I would call that the triple maxi. What do you think?
Yeah, that's a triple, three.
That's a triple.
Yeah, well, it's essentially mining Bitcoin with an algorithm, right? It's a very unique approach.
Correct. Yeah. A lot of miners are actually interested in what we're doing, because what we're doing is we're mining Bitcoin with software without any of the overheads and depreciation that comes with the mining. But anyway, let's just take a look at some of the data. So this is really interesting. Now, we don't always outperform the buy and hold, because if Bitcoin does a massive, a massive rally, you're not going to be able to keep up with it, because we're constantly closing deals, resetting, taking profits, closing deals. But as you can see, the way the price has been going since December the 1st, we've outperformed the buy and hold by around 14% in less than 6 months. The market's hardly crashing, and we're outperforming it, which is fantastic. The market's up 20%, the algorithm's up 35%. So it just gives you an idea of what we're doing here and what the performance looks like. As you can see, it looks pretty similar to the equity charts that Giovanni posts regularly on his X. So this matches up with that completely. Anything you guys want to say on that?
Yeah, I just want to add that basically the comparison is infinity, because anything it does generate is in addition to that Bitcoin is collecting dust in your wallet anyway. So yeah.
I like if you can show again the position. I like how he took advantage of that move, down.
Yeah.
It's basically, this is where the intelligence of the algo comes from. It finds all these local minimum, that it's not randomly buying. There is a correction. It's trying to find that.
I wanted to highlight a point. It's liquidity in, liquidity out. It's using the same patterns or the same process that the market makers are doing. Those positions that it's taking on the down move, that's liquidations in the market. So it's taking positions. When those sellers are forced to sell, we're buying. So the algorithm is buying just like the market makers off of a liquidation event, and then it takes profit off of a liquidation event to the upside. So it's liquidity in, liquidity out. It's doing the same thing. Yep.
Correct. And now we usually run our clients when they sign up with us 2 settings. So this is pretty much the larger TP settings. As you can see here, the gap's quite wide. But some people want a little bit more action. So we also have one that's on a bit of tighter spread. Now, when you compare them, you can see how this has much more activity. So this chop here, because we've got a tighter take profit, it's actually able to take advantage of that volatility and these kind of whips or swings. So you can see how it's entering the trade and basically just taking profit right away, and then resetting, entering the trade, taking profit. And you can see that's been doing that consistently since the 14th of July. We've closed, we'll say 1, 2, 3. So like Sebastian said before, for a period of time that's quite boring for most people, we're able to, really use even this really relatively small amount of volatility. Like, what's the range on this? Around 3%. 3% volatility over a 15-day sort of price period. It's fantastic to close that many deals. So we're always busy. To come back to one of the questions that someone just posted was over analysis paralysis. The macro stuff that we're doing is just to give us a roadmap, right? At the end of the day, we're just letting the algorithm do its thing. And if the price continues to go up to, bull run, top of the bull run peak predictions, that's fantastic. But if it decides to stay where it is, as you can see from this, we're still going to be printing. And if the market crashes, we can go back to the other algorithm here. We're going to be able to capitalize on those larger swing downs, just like we did right here. All right. To be honest, we should hope that it actually crashes before it goes up again, because these positions do give us a lot more money. So whichever way that we're doing it, things are looking good. Future's very bright. So if anyone wants to add this tool to their toolkit, just book a call. We do free consultations, and the website link is at the bottom of the screen right here.
So, and I want to go back to this. So I wanted to show you, right, because and this is one of the things that I'm trying to emphasize more and more, like I was saying before, that really, I know some people are going to resist this, because we are basically told all the time, hodl. Yes, you should hodl the majority of your Bitcoin, but find a way, and it doesn't have to be this system, right? I see a lot of people that are very successful doing cover calls, for example. So find a way of getting some yield on your Bitcoin. And nowadays we have so many tools. We have all these derivatives. We have all these treasury companies, so you can buy some of these stocks. There are some company like MSTY that is trying to do that for you. I would rather learn how to do it yourself, But if you want to rely on a system like ours that is much more automated, it doesn't require you to learn basically almost anything. You should still be aware. You should still look at the charts, trying to understand what is going on, being an active participant. But so this graph, I don't know if you can really see it, but let me see if I can make it a little bit bigger. But it's really a powerful graph. So what I'm trying to show here. So, well, first of all, these are an interesting graph about. Let's go back. Let me zoom in. So this first graph here is showing what to expect from Bitcoin, right? And in terms of percentage per year. So I show almost the entire history of Bitcoin, starting from year number 2, I think. And you can see the CAGR, right? So basically the annual returns that you get are going to be variable because in the past we had these huge big bubbles, right? There were times where in 1 year you could have done 1,000%, right? It is crazy. And there are oscillations, right, due to the bubble. You see these oscillations are becoming smaller. The bottoms are actually much more consistent than the bubbles. The bubbles are decaying. This is along the same idea of having basically a reliable support. This is how this is our a confirmation that there is some kind of a bottom there that it doesn't change. But you can see that annual returns are going down, right? And the blue line is the power law. So the power law, you can calculate what is the theoretical return given by the power law. You can see it does represent, in an almost uncanny way, a good average, right? It represents a trend, the average trend for these yearly returns. So it's not just a line that fits the price, it fits also the returns. It is pretty remarkable. Then, of course, you can combine this gain over time, and this is what you get. These are the gain that you could have got. If you started a few years ago, you could have made basically a million times, a million pair. These times are gone, though, right? We are not going to see anymore this type of returns. Let me see if I can scroll down here. In fact, I project what these returns are going to be from the next few years. So here is the blue line. The blue line tells us that right now, this year, right, if we don't have a bubble, etc., we are projected around 42%. And as you go down in the next year, now it's going to be better than almost any type of returns that you can imagine. Any type of other asset like gold and the stock market. It's going to be mostly, in particular, if you're thinking these are long-term returns, right? It's not just NVIDIA maybe can have a good year and be more than 20%, but very unlikely any stock can do 20, 30% over many, many years. And Bitcoin is going to have higher returns than that. And then kind of by year 12, it's going to be around 22%, right? Still pretty good. Now, what happens, and these are the total returns, right? We are expecting more than 20 pair in about 12 years from now. So what happens if you add any type of yield? So I have to be really conservative because I like to do these things in a conservative fashion so I don't get disappointed. And then anything else on top of that is good. So even if you do a small yield, and Costa just showed you, right, this trading system can do much better than that. But let's say 1.5% a month. Add 1.5% a month and compound it over a year, what do you get? You start to get returns that are very similar to what we got in the past, right? So we will have to go back in the past several years to get a 60% return. That is what you're getting if you're using a system like this. And now, you're going down, and in 12 years from now, you're going to have returns that are higher than what we get right now. Okay, so you're basically are denying these diminishing returns that most people are going to experience. What that means in terms of compounded gains? Well, instead of having a 20 that is amazing, what about 120? Right? It's crazy. So, and this is with a small little yield per month. So if you want to get basically go back in time and experience some of the returns that Bitcoin was experiencing several years ago, you want to do a little bit of something different, right? Like using a system like this. And this again, here, this graph shows what you will get. I like Costa likes the cash return. You can do one, the other, or both, right? You can do a little bit of your investment based on just compounding US dollars. You can use Bitcoin as a collateral. So if you use Bitcoin as a collateral purely, you will see your Bitcoin growing. And according to this calculation, in about 12 years from now, you will have at least 5 times more Bitcoin. It is amazing, right? Because most people.
And if they use your indicators and can pick the top and the bottom,
yeah,
well, it's much better than that
sure.
as well.
We are doing something as conservative as possible, right? We are simply following the power law. We don't have bubbles anymore, but you get a very small little compounded yield every single month. And we call it, some people complain, when you actually give them a system that does more than that, they still complain. And other people think actually that is impossible to do a 1.5. It is a really amazing type of returns. It's doable. People are doing it using options. We are doing it. It's very within the reach of our system to do something like that. And people forget what that means, right? Because as you accumulate this Bitcoin, you can increase your position, you can update the bot parameters, and continue to compound over the years, right? So if you have an horizon of about 10, 12 years, that even for somebody older like me, it's a quite close horizon. For a young person, it's nothing. It's going to pass like this, like an instant. You're talking about multiplying your Bitcoin by 5. It is crazy. Most people cannot do it. And you can continue to do your DCA. You can continue to buy Bitcoin on a regular basis, but now you have something that, in addition to your DCA through cash, does its own DCA. It's like a self-referent loop, So this is why I insist so much. And anybody that tells you, oh, you can retire with 0.1 Bitcoin, they are telling you a lie. You should not listen to them, because it's not a realistic goal. It's they want your likes. They are not caring about you being successful, But this graph is a very, very powerful graph.
Yeah, I like it so much, Giovanni, because it's 1.5% a month, and look at the curve, right? And hey, we can set you up the algo to do 1.5% a month, no worries. And the risk on going for returns like that is going to be seriously minimal as well, right? So for people who are risk adverse, if you like the look of this chart, 1.5% is attainable with, I don't want to say no risk, but it's very small. So it's very powerful.
Yeah. And this is why, you should understand that we are serious people, because we're talking about things that are achievable and real. We are not here to tell you, hey, this is a get rich scheme. You're going to be a billionaire, in few years from now. All that stuff is ridiculous. But, something like this is something that you can sit down, make your own calculation, understand what the risks are involved. And it's something that you can achieve, right? It will require you to be aware of what is going on, keep an eye on your investments, etc. And people talk about tax implications. You can do this inside an IRA account. A lot of these places where you can do this kind of trading. Unfortunately, if you don't want to get all the benefits, you would need to have a little bit of leverage. Usually, we use a 2, 3, 5 pair leverage, because again, our goal is not to be liquidated. We don't want to be the people that Marcus indicates. Oh, look at all these crazy people, with 100 pair leverage. We are not that ones, But for example, an IRA. Why consider an IRA for the next 10 years, 15 years? You can do that within that tool. So there are a lot of things that you want to explore, understand, educate yourself. And these are very powerful tools that you can use.
Awesome. I wanted to add the last question there. I can just answer that for Brill. So Severio, Giovanni's son, has set up a free Telegram channel, and it's part of the Power Law Quantonomy group, and we do have a Minotaur Trading Systems channel where a lot of people are sharing their settings and discussing their use of the algo. So maybe how does he reach out? How does he find the Telegram link to Severio's?
Yeah, and we have
channel?
also is inside my
and the Discord as well. Yeah, but I think you got to pay to be in the Discord, right?
For the Patreon. But yes, let me write down the name of a group.
The Telegram's free. I
Yes,
think.
I'm looking for it. Let me put it in the chat window. Let's see. I'm not super familiar with Telegram, but let me see if I can find group info. The name. View group info. It's called BTC Power Law, but I don't know how to join. I'm opening it. Maybe we should ask Saverio to give us information. Yeah. I'm sorry for that. I don't know how to get.
Yeah, that's all right. I'm pretty sure if they go to Severio's channel and watch one of his videos, it should.
Yeah.
Yeah, it should be pretty easy to find. Or maybe I can actually post it. Maybe if I just go to the channel. Oh, here we go. No,
I'm not familiar with.
they'll find it. Just go to Severio's YouTube channel and ask. I think he's got it in the description of his videos.
Right. Yeah, I don't know how to invite people.
Yeah.
Okay.
All right.
Yeah,
you'll find it.
And we have also a group if you want to join my Patreon.
Oh, he's part of it.
Here is actually how you do that. And we have also a channel there for the Telegram, for the Minotaur, where we discuss anything related to Minotaur. You can ask how many questions you have. We share our results and, but mostly, the idea is that, you should not be there trying to set your own parameters all the time, right? Most of these parameters will give you this goal, some without taking a lot of risk, right? Some people want to be a little bit more aggressive. Some people want to be to have more frequent trades, etc. But if you are looking at these charts and you're saying, look, the main thing for me is to preserve my capital, and I want a relatively achievable goal, then even 1.5% a month, it is really achievable, and you can count on it because it should be independent from the market. Maybe we do better during the bull. If we have a bear, it should work, right? And then that is your base, right? Try to check that for several months, and then you can always talk to the team, and the team will help you to set up things in a different way, if it's needed. Sebastian, awesome. You want to maybe make a comment on that?
Yeah, definitely. The out of the box settings that we set clients up with, they're built to trade bull and bear markets, and they've been tested in those markets, and not just back tested. They've been live tested in markets as well. I mean, we've had our whole community weather dips in Bitcoin's price at 55 to 60% and come out in profits, right? So, there is a lot of customization, and I think you can really get stuck in the weeds of the settings. And even sometimes, to be honest, I think some of our customers are playing around with the settings, as we said earlier, trying to make something happen in the market, when I think the sooner you realize that sometimes being in positions and holding and waiting is a psychological game, right? You're not getting eaten alive by a funding rate. You're not, we're just simply waiting. And I think it's important to understand that the system is built to be set up and to run for months to years at a time. It's not something that requires constant adjustments, So definitely, if you're someone who likes the tinkering side of things, we do have clients who do a lot of tinkering and have a lot of success doing that. But, we will give you the settings that we've built and developed over a number of years, which put you in a position to succeed.
Yeah. Okay. Let's see if we have any other. I think we covered most of the relevant questions. Do you guys have any concluding remarks or anything you want to add to the discussion?
There's one more question there, I said, Giovanni, from
Yeah.
Dan saying, is there a way to predict when the next leg will occur based on the liquidation levels? Okay, so good question, but it's definitely the wrong mindset. And Marcus will attest to this, right? We're not using the liquidity heat map to predict necessarily where the market's going to go. It gives us a strong idea of where the liquidity is building and what the data is showing. So a lot of people make the mistake of looking at the liquidity heat map and seeing a big chunk and then trying to directionally go long. That's the wrong way to play it, because the intraday, the market can do anything going up and down, right? So you want to simply use the liquidation levels as a key to look at live order book data of open interest and futures positions to see potentially where the market could go up or where it could go down. But you do not want to use it to discretionary trade and make positions based on what the pools are doing, because you will lose money doing that unless you're an expert and understanding how to trade. So yeah, that's my input there.
Yeah, just to add to that, you don't want to be in a predictive in nature strategy, because no one can predict or control market behavior. You use the liquidity pools as a target. They become targets. So you don't know exactly when it's going to move there or how it's going to get there, but it is a target. So would use it as a target and get solid entries and have patience, and then you'll be fine. Don't try to
Yeah.
do it highly leveraged and where you're trying to make something happen from one day to the next, predicting
Yep. When you have the algo, that it will naturally trade the liquidity pools for you.
for you. Yeah. Still patience.
Okay,
Awesome.
great,
All
guys.
right.
I think we covered a lot of interesting topics. We are watching what is going on with Bitcoin. We will be here next week to give another update. All right. Thank you so much. See you next week.